Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, last week we saw the Australian dollar attempt to rally on from the break of 76.30.35. As it went straight for that 77.05.40 supply zone, you can see the market has retreated from the near 4-month high of 77.11 on Friday. However, as the market does attempt to construct a further bullish case against the US dollar, fresh longs are still not considered above the 77 handle due to the RSI that's clearly breaking down here from a 3-day outlook. This week we have a massive release of data, starting today with the Cajun PMI manufacturing. Then later we have this week we have the Australian retail sales, followed by the RBA monetary policy tomorrow. It is viewed that the RBA will keep to historic lows of 1.5%. However, the RBA statement could be the wild card due to the fact that earlier last week we saw a story from Bloomberg that former RBA board member John Edwards, who commented on the future course of the central bank's monetary policy. He was quoted to say that things are time to get back to normal and looking for a likely 8-quarter percentage point tightening in the coming 2018 to 2019 if the RBA's economic forecast is proven correct. Just a few things to note. Although the technicals are not supportive to a bullish case, if we see a break above 77.40, this could inject further momentum and see a dynamic rally to a target around 80 cents. However, I don't view that at the moment purely for the fact that the technicals are not supporting this. A break beneath 76.50 would give further indication to the downside and look towards a target of 76.1525 and reassess from there. With the US remaining weak and now hitting a 40-week low of 95.22 has fueled the rally for euro. Now, looking at the price action, above 114.85 is concerning due to the fact over 2 years you can see the market, although stabs above there and records a highs around 115 to 116, I expect to see another rejection from there and eventually see the US dollar turn around. What mainly triggered the market for this for last week to the bullish side is that Mario Draghi speech that many market participants misinterpreted after the news wires from an unnamed ECB source indicated that the speech was misjudged as the intent was more balanced in nature rather than signaling any potential tightening of policies. However, with the dollar weakness and also growing concerns in the US with Donald Trump over the weekend, speaking alongside with South Korean President Moon Jae-in, Trump declared that the US patience with the North Korean regime is over. The era of strategic patience with the North Korean regime has failed, and frankly, the patience is over. So we do need to keep a close watch on what turns out from that conversation, and if the two sides do heat up with North Korea and US, could give some uncertainty where the US dollar may be going. However, to the index from the break of 95.85, I am viewing a move towards 92.80 to 93, and it's currently trading at the moment around 95.50. So looking at euro, if we do get a move towards topside, I do feel that the market will fail. Now, with the support holding at 113.65.70, a break beneath there would give further scope to the downside and bring in a target of 112.2025. Well, dollar yen still maintaining its bullish stance considering how weak the US is. However, I feel that there will be further US casualties in the start of this week. This may see a move from away from that 112 resistance at 50.60 and look towards a minor support at 111.70.80 after recording a low on Friday of 71. It is viewed from a technical point the market could drop back towards 111.30.35 and reassess from there. However, with dollar yen being a safe haven currency, we could see further tension from the US that could trigger a rally on towards 112.60, and a break there would see further scope to 113 to 114. Well, the Great British Pound, a little bit concerning if this pattern. As the market rallies, we can see that the volume is actually dropping away, and also the indicator from the RSI is actually shifting back to the bear side. Although the other two indicators, the MACD and stochastic, don't fully support a decline, we could see a rejection from the 130 to 131 handle and look back towards the support of 129.45.50. With the UK newspapers over the weekend saying that Prime Minister Theresa May's ratings have slumped further after last month's general election, a new opinion poll showing 61% of voters now view her in a more negative light. Now, if that's the case, with a mixed bag also with Bank of England, Mark Carney comments added that to move up in interest rates is likely if wages and growth gather further traction. So the pound is likely to be further in a roller coaster ride, but if we get a break beneath 129.45 and if volume continues to remain light as the rally carries on, then we could see a move back towards the downside of 127.70. Well, with gold weaker to the start of this week after Friday's decline, looks towards the support of 12.38. Now, a break beneath there would give further scope to the downside to 12.31 to 33, where I feel the market would again stage a recovery and look back towards the resistance of 47 to 52 to 53, with a cap now serving at 59.61. Now, that being said, a break beneath 12.31 would give further scope to the downside and bring in a target of 12.15 and reassess from there. Well, it would seem that oil's rally has continued on Friday after it recorded a potential end of the 23-week run of uninterrupted gains in the US rig count as the overall tally fell by 1 according to the Baker Hughes survey. So as the West Texas Intermediate regains momentum since being in a firm downtrend, as you can see here, the market now looks towards a target of 46.80. Now, a break above there could give further momentum up towards 48, 40, 60 before turning around. However, if this streak of, for the 6th consecutive day bull rally fails and we see a move through 44.60, then this would give further scope to the downside and reinstate a target of $41 a barrel. So that wraps up my daily video. Thank you very much for joining me. And as always, look out for the intraday report that will be released shortly. And I hope you have a great start to the week.